Hi, everybody. It's Brian Shannon from alphatrends.net. Today is Friday, the 14th of November, 2025, and we had a slightly lower market for the NASDAQ, the Russell, and the semiconductors. But we did see a little bit of outperformance from energy names, and some of those are starting to look pretty good, actually. And biotechs led the way, but crypto really got hit hard, down close to 10% this week. We'll talk about that as well in a moment, but let's start with the ETFs and make some sense of this. We've got the S&P 500 on the daily chart on the left. That's the 20-day moving average, the red line. The blue is the 50-day moving average. And what we often see is as trends progress, they find buyers along the rising 20-day moving average. And as the pullbacks get a little bit deeper, it becomes the 50-day moving average that's tested. Anytime any level of support or resistance is tested with more frequency, it runs the risk that that level is going to give way, and we're going to see something deeper develop. So we can take a look at the anchor off of that low, and this is what I'm really hoping we can see is a flush down towards this level, down near 657 next week. Now, we had a decent recovery in here today, but we are below the declining 5-day moving average. That's the orange line over here on this 30-minute time frame. We're below that purple week-to-date volume-weighted average price, below the blue month-to-date, and the anchor off of last Friday's low. So of course, the market can turn around and move back higher here, but right now we run the risk of a little bit deeper pullback, and the setups simply aren't presenting themselves as much. We had some nice trades on Alpha Trends this week, one in Netflix, not NVIDIA. We'll talk about NVIDIA in a moment, but Netflix, we bought it right over here at 11.11 on this day, and sold some as high yesterday as up in here, and this was, we didn't do a price target, but this was a level that we thought might have the potential to become resistance, and we actually got stopped out of the last piece of it yesterday. We also got stopped out of our last final sixth of a piece of Rivian today after buying it right in here. Anyways, let's go back to the NASDAQ, because the NASDAQ is right on the anchor from that August little pullback right there, and you can see here we have the same issues on the 30-minute time frame that we have with the SPY. That is, we're below a 5-day moving average, which on Monday will be declining because this is the data we average out. So we average in new data. It would have to be up here in this zone for the 5-day moving average to turn back up. Anyways, we're stuck below last Friday's anchor. We're below the month-to-date anchor. The anchor off the all-time high is the red. And we're seeing a little bit more frequent tests of the 50-day moving average. So the more times any level of support is tested, the more likely it is that it'll give way. Now, if that's to happen, then we've got to go a little bit deeper back and say maybe the anchor off of here is where we're going to see the market pull back to. If things really got negative, then perhaps it's the anchor off this gap right here. We can also use any other tool you want. And you have to remember, moving averages, Fibonacci levels, volume weighted average price, they're levels of interest. They're not an automatic place, not for me at least, to do business. They're a level that says take a closer look on a shorter term time frame that there might actually be evidence the buyers or sellers are gaining control in that level of interest area. By the way, this Sunday at midnight, the sale for Alpha Trend subscription expires. So it's a great deal. It's $2,400 worth of value for just $999. It includes 3 daily videos. They're all brief and concise. Is a better word than brief. They're concise and educational and actionable. You've got a Discord channel with 8 different little channels in it where you can get feedback on trades from me. We do 3 monthly Q&As, and we also have, like I said, a 30-minute one-on-one with me if you sign up for this deal only. If you sign up for the regular subscription, you don't get the one-on-one. It's part of this package only, so be sure to take a look at the link for that. The Russell 2000 continues to be the worst performing of the major equity ETFs this year. We gapped below this band of support and reversed up through it. So that's a lot of times the way we see a near-term rally emerge, but it's really not compelling here. We're still below the declining 5-day moving average, the week-to-date anchor, the anchor off last Friday, the declining VWAP from the peak, a declining 20-day moving average, and that 50-day moving average in the next week is going to be declining as well unless we're up in this zone, above this zone right in in here. So a lot of reasons to just continue to be cautious. We've seen, all the high beta stocks, high ATR stocks really get hit hard. Not all of them, of course, but a large majority of them are getting hit super hard as well. As I said, we're going to talk about crypto in a moment. Let's first talk about the semiconductors because they came down to their 50-day moving average. We haven't seen a test of the 50-day moving average since September, and the anchor off of that test and that little gap lower is right here at about 330. Now, we've got the same exact problems on the 30-minute time frame that we have with the other markets. We're below a declining 5-day moving average. We're below the month-to-date anchor, the anchor off the all-time high and last Friday's high. So we look at this and say, the trend has been lower here for a couple weeks, and that is generally not the best place to sell short after several weeks of pullback. So maybe we pull back. We rally up to the 20-day moving average that in the next 3 or 4 days, and then we start getting rid of this data. If we get trapped below the 20-day moving average, the 20-day moving average by next Thursday will begin to decline, and that would be below the so it would start to, in other words, pinch between the 20 and 50. And then if we were to break below that, well, then we have to look at other levels. These are the levels that I talk about every single day, at least twice a day for the subscribers to Alpha Trends. Let's take a look at crypto. Bitcoin started out the year at 93,381, and here we are less than a little more than less than 1,500 points below that. Above that. This is a level that I've been telling subscribers we want to keep an eye on. This is the summer of 2024 low anchor, and that comes in right around that 93,000 level. So we can see that we still have in here a downtrend. I've been trading this and trading it aggressively because I'm trading bounces in a downtrend. I don't sell short crypto. I'm not even sure if I can. I've never bothered to check. I just don't want to sell short crypto. I don't like the overnight risk of that, especially being short. But we still have that pattern of lower highs and lower lows on the daily time frame, and this 200-day moving average is starting to roll over as well. I do think, though, this is, we got a nice bounce from the year, from the anchor from the election. That's the orange line. We got a nice bounce. We traded out of it. I nibbled a little bit the other day, sold most of it last night as it was starting to break down, and I'm looking to be a buyer somewhere in here. I don't have any bids stuck in there yet. I'd love to see it go negative on the year and maybe buy a flush below that. There could be some stops that are waiting below there for it to go negative. And these are, poorly placed stops, in my opinion, because why would you set a stop way down there when the market has just dropped 30%? Why would you have your stop 30% lower? It doesn't make any sense. So if this market goes negative, that's for the year. That's where you're going to think, I think, start to see a more powerful bounce emerge. But still, I'm looking at Bitcoin and thinking, if I buy in that 93 zone, it is for a bounce. I will likely sell it up towards that 100 level to start. And if it continues to go, well, I'll hold some, but I'm not going to hold the entire position. Ethereum continues to find buyers along the year-to-date anchored volume-weighted average price. I saw today that Tom Lee's vehicle, BMNR, is long at an average price of 4,000. So we're down here at 3,300. They're down 25% on $16 billion worth of purchases. I wouldn't have the mentality to do that. Anyways, it's showing some relative strength here. If it breaks down a little bit, I think that, with that type of buyer in there, they're absorbing a lot of the supply that's coming in. I can't imagine where Ethereum would be if BMNR wasn't buying as much as they are. But that's, the reasons why don't matter. It's just there's buyers defending this level, it seems. So this could be the better base in here, but it doesn't mean you're going to get a giant bounce. Solana continues to be the worst of the group of what I consider to be the majors. And what I'm looking for in Solana, ideally, if I'm going to buy it, I'm going to wait until it comes back down to this anchor. If you recall, back earlier this year, we bought right in this zone, right in here, and that was a fantastic move. The anchor off of this low from 2023. If we come down towards that 125, 127 level again, that's where I'm looking to potentially be a buyer, and I update that all the time for subscribers to Alpha Trends. So again, that sale expires on Sunday evening. be sure to take advantage if you're interested in what, the goals there are. One, to provide, money-making ideas every day. And I don't do that every day, of course, but the majority of the days we've got good trades going on, like the ones I showed you in Netflix, Rivian. We had a couple this week, GCT. We got involved in this one over here on this day and got out of a third here on strength, and we got out of 2/3 as it was breaking down and avoided that pullback. So I think we made 5 cents per share or something like that, but we didn't get stuck with a loss or the mentality that we have to hold it. And that's the explanation I go through and saying here's where I'm looking to sell some and that sort of thing. Anyways, going back to the equities, the biotechs continue to be the strongest. They are quite resilient here. They found buyers this morning at the 5-day moving average and held on to their gains. So they are innocent until proven guilty. Gold today had a big gap lower. And as I was telling people, this is why I don't trade gold. I don't have the mentality to be, up in this stock and then all of a sudden down just based on one gap. So if you bought it over here, great. But anyone who bought this week, the average price that gold traded at this week, the GLD that is 381, and here it is at 375. Not a big loss, but still it's down, and you can't control risk on those gaps very effectively. So that's why I don't trade it. It does look like in the next couple, by the end of next week, if it hangs in this area, that now declining 20-day moving average will look like this. So maybe it pulls back a little bit deeper, gets caught by the 20-day moving average in the 50, and then continues to move higher. Bonds also, I'm hoping they pull back down under here and undercut this low right at this point and kind of flush down into this zone. It's not an automatic buy zone, and I'm not even sure I'll get involved. But if you're looking to get in bonds, I think you want to wait for at least down there. I will also point this out, though. If you look at this chart here on the daily time frame, I don't look at these or put much faith, I was going to say stock in them, but that could be looking at a head and shoulders pattern. And if it is a head and shoulders pattern and you believe that you should trade them the way the textbook says, it says you should sell short under here, and the height of the pattern, 92 to 89, 3 points, minus the breakdown point of 89 would give you a price objective of 86. So maybe it's going to drop down to 86. I have no skin in the game here. I'm hoping it can hold in this area. We'll see, but it's just another vehicle to trade if you're going to trade it. NVIDIA is still holding this trend line here. It's holding the 50-day moving average on a closing basis, but it runs the risk of doing this. AMD, it behaves well, but it's getting a little bit tired, it seems, up here. I wanted to point out, some of the nuke stocks, like Kamiko. This one here has been in a great uptrend. Be very careful with this one. Here's why. This volume right here is the biggest volume that it's traded since this gap lower right here. Big volume tends to peak at turning points, and this looks a lot like a blow-off top to me. Very similar to the look that you see in Nokia. I know there's a lot of people talking about Nokia this week, but look at the biggest volume here on this daily chart. You've got to go way back to over here. You've got to go way back to 2021 to find volume that's larger than this. This is big volume peaks at turning points, and it seems like that's the case, and a lot of people are getting trapped in here. People who are late to the party. I didn't see anyone talking about Nokia until this week, really, and maybe I'm just not paying attention to it, but I saw a lot more chatter about a stock like this. Be careful about what you read on social media. This week over in here, we had people saying the Fed is going to, or I'm sorry, not the Fed, but the government is going to reopen, and therefore the market is likely to soar. Well, guess what? The rumors began Friday afternoon of last week that the federal government was going to open again. So what did people do? They bought the stock market. They bought based on that rumor. And what happened when we got the news? They sold the news. Sound familiar? Buy the rumor, sell the news. Have a good weekend, everyone.